The real estate market over the last 5 years has been on an upward rise that has just been incredible. Stocks have been performing really, really well, but so has real estate. So I wanted to look at a property to see if it's good investment or if I should pass. I've been a real estate investor for some time and have had great, great success in buying real estate and holding it long term. Buying real estate's, the price that you get is incredibly important. Timing is very, very important because real estate moves very slow compared to stocks. And in this case here, I'm going to look at an investment property of 6 units located in Orange County, California, one of the really desirable places to live in California. It's the place where I live, so I know the area very well. And real estate is always local. I know that some investors buy all over the place, all over the country. That's not the investor that I am. There's probably other channels that could really help you out there. I'm going to really look at a local market where I have an advantage of information, knowing that market, knowing how I can rent those units and be successful at it. So let me show you the property, and then I'm going to get into numbers, how I look at the numbers for a real estate asset and look at the investment and the returns that I expect out of a particular asset. The property I'm interested in is located in Santa Ana, California, and it's a 6 unit property with 2 bedrooms and 2 baths. I like that configuration. It's a very good property for people that want to live in Orange County, work in Orange County, and pretty much live in Orange County so that they can appreciate all the amenities that this county has to offer. The rents are fairly high. Units like these would probably rent about $2,800 per month. So it really has a good revenue stream in it. Overall, I like the building. I like the location. Remember the three rules of real estate: location, location, location. And when you're investing for an income producing property, you don't necessarily want to invest in a really luxurious area where, geez, the acquisition cost is going to be so expensive. You're going to have to rent it at a very high rate. That's not my area of specialization. My specialization is probably to that working professional or that working person, maybe dual income couple or small family. That's where I tend to operate, and that's where my units are rented currently. This 6 unit apartment building is priced at $2,400,000, which is a very high price. That's $400,000 per unit. And the way that you would invest in a property like this, you'd have to put up a substantial down payment. The structure that the real estate agent that's listing this property as an example is 50% down, which is a hefty down payment of 1,200,000. That's the reason why a lot of these deals happen with partnerships, multiple investors coming together with that down payment and then buying a property like this. My style is I like investing, just my wife and I. We accumulate cash and then put down payments. So I'd be looking to probably put 30 to 40% down on a property like this and seeing how the financing would work from that point. This property, a couple of things to point out is these high prices are going to create higher expenses. A couple of reasons. One, property taxes are based on the sale price. So if one buys a property at 2.4 million, your taxes are going to be based on that sale price, approximately 1.25% times that sale price here in Southern California. The insurance has been going up. It's been skyrocketing in some areas like Florida, from what I've heard. And insurance here in California has really risen. It's been one of the headaches that my lovely wife has had to deal with because our insurance pretty much has doubled in cost, and she's had to really shop around and find the best insurance for our rental properties. Utilities, I would say, is more stable. Maintenance fees are also going up because just inflation. So the cost of being a real estate investor have really gone up. So it's very important to keep in consideration. I'll put those in my overall property assessment spreadsheet that I'm going to share with you. Interest rates. Interest rates have surprisingly stayed high. We've seen that the inflation rate has been tamed by the Federal Reserve, and they have communicated that they would like to reduce interest rates over the long haul. But we're still seeing interest rates really in the high sixes, is what I'm seeing. I think the person representing this property is probably being too optimistic by saying 6.45%. On a loan like this, I'm probably expecting 7%, maybe even 7.5%, because the rates have really stayed up. Overall, the market for properties, the good news is there's better inventory because these high interest rates are keeping a lot of buyers at the sidelines. And allowing for more inventory to enter the market. So there's much better choices now than I've seen over the last 5 years. Frankly, there was a real scarcity of properties for about 4 years, and now it's getting a lot better. I'm hoping that higher inventory amount is going to result in lower prices because sellers are going to have to compete with one another to sell their property. The sales comps for properties like the one I'm looking at are really, really good to look at. And it shows that this property may be overpriced. On average, each unit has been priced at around 355,000, but this particular owner wants to go with 400,000. And in a rising market, they'd probably get somewhere near 400,000 per unit. But I happen to think that the market's beginning to go down. We've seen a lot of discounts on properties as I do my homework. I've seen that properties are being discounted now, or the price is being lowered, which is a good sign. I think with more time, we're going to see lower prices. So at this time, it looks like this particular property is being priced on the high side. Over time, a landlord can expect to raise rents. It's just what happens. It's an inflationary effect. It's really fair on both sides. And this particular property is currently rented at levels that I would expect you could raise your rent prices. It's being rented at around $2,250, and I think you can raise those rents up to about 2,800. I would agree with that. Now, one of the things that I always recommend when you look at stocks or properties is try to have an information advantage. In the case of real estate, the advantage is knowing a market. I invest mostly here in Southern California, really exclusively in Southern California, in areas that I'm familiar with, in areas that I really know. It's the information advantage. It's really hard to buy in Southern California since the prices are so high, but I have more confidence in investing in areas of Orange County as well as San Bernardino. And the reason for it is that I really know how much I can rent properties for. I know how expensive properties are, how to find a good deal. And I have a network of contractors and professionals that help me in managing my portfolio of real estate. In general, I really like this property. I like its location. I like the architecture of the property. I think it's really well set up. But is it a good investment? That's where I really put the numbers into a model where I could then determine what kind of return am I going to get. Let me show that to you now. So I like to look at investments and have a couple of different horizons. A 5 year horizon, meaning I'd buy a property and then sell it after 5 years approximately, or buy it and sell it after 10 years, buy it and sell it after 20 years. That way I could expect a particular rate of return. And the riskiest investment that I can make is short term with real estate. It's really hard to get in and out of real estate. It's not like a stock that you buy. You could buy a stock at 9 in the morning and sell it at 9:15 in the morning. No problem. In real estate, it it's not that easy. To buy a real estate asset, you might take 30, 60 days. Once you decided on the property, to sell it might take you 6 months or a year to sell it. So it's very hard to get in and out. So let's take a look at where the numbers landed for me. So this property, my model basically looks at all the expenses in the investment as well. I've got a purchase price, of course, of 2.4 million. I'm looking at a down payment of $900,000 and purchase expenses of 48,000. There's a lot of expenses when you buy real estate. It's not, simple. You got to pay a lot of fees. You usually have to buy some points on the financing. There's just expenses that are involved when you buy real estate. So I include that. My overall outlay is going to be about 948,000. And then I put those into a model and I include, what I'm going to receive in rent and then all the negatives of interest, taxes, utilities, maintenance, and so forth. Year one obviously is a big investment year. And I'm looking at complete, negative cash of 938,000. Now, in year two, we begin to see positive cash, but that's positive cash on a $948,000 investment. So the yield is terrible, 2%. I don't think anybody should be happy with 2%. I can make 2% easily. I could beat 2% by going into treasury bonds and make heck 4.5, 5%. So taking that amount of risk is pretty risky. In the first 5 years, really, the yield would be terrible on my investment. And if I decided to sell, I'd probably sell and lose 66,000. So overall, this is just a terrible investment if I look at a 5 year horizon. And really, that's an important horizon to look at. 5 years is a long time. A lot of things could happen. Maybe you have a change in your life and you need to move across country or move far away and you'd like to sell this property. Maybe you've seen other opportunities to invest in other investment classes and you'd like to get out. So 5 years is a long time, but with real estate, I've held real estate for a long time as well. 25 years is what I've held my longest investment in real estate. And that tends to really favor the investor. As you invest long term, you make just really, really incredible returns. This property over the long haul will return a better yield over time. You can see in the latter years, as you're raising rents and some of your costs do hold steady, especially your interest rate because you're paying off the loan, you have a better yield. But I just think it takes too much time and too much risk to get to this level of return. I mean, we as stock investors, we would not accept this type of investing thesis. We'd probably reject it. And over 20 years, of course, once you get beyond year 10, again, the yield keeps getting better, which is a motivation to really hold real estate long term. But I am the type of investor that I want my cake and I want to eat it too. I want this to be as low risk as possible. The 5 year projection needs to be at worst break even. The internal rate of return needs to be zero or positive. Therefore, this particular property is desirable, but it's not priced right. It needs to come down substantially. Prices for real estate have really gone up and interest rates have stayed high. Therefore, real estate investing for the last 5 years has somewhat been terrible, in my opinion. I think stock investing has been great. There's been good opportunities. Investing in alternative assets, some bond investing a couple of years ago was incredible. I'm getting yields of 10% plus on some bonds. So to invest in an asset class, it's, pretty much destined to fail is not what I'm willing to do. So I'm going to pass on this, but real estate is an area that I'll continue to look at. Maybe every 6 months, run through this type of exercise and see how properties are performing. I've looked at 10 properties in the past week just to really get a sense of where properties are priced. I studied their history. I studied how there's been price reductions on properties. I've also looked at some videos. There's some really good YouTubers out there that just really focus on real estate. And my conclusion is that the market is beginning to go down, but real estate moves very slow. And it might take 2, 3, 4 years for the market to be really desirable. The last time it was incredibly desirable was 2010, 2011, 2012. Nobody wanted to buy real estate. Properties were really, really well discounted. And those were great investment opportunities that I took advantage of. Not expecting it's going to be that great anytime soon, but I'm really looking for a better market to make an investment, since investing in real estate takes a lot of capital and it takes a lot of patience, and making the right decision is incredibly important because you can make a lot of money in real estate. You can also lose a lot of money. So that's my video on a 6 unit property investment here in Southern California. I hope you found it interesting. I'd welcome any comments that you have on my video and appreciate you watching.